What if one small move today becomes your strongest position 10 years from now? Could it grow into a core holding for a decade or more? That is exactly what we are answering right now. Two companies, both leaders where it matters most. A leader in cloud-native security, building the shield for our digital world. A giant in advanced chip manufacturing, powering the AI era. Both sit right at the center of unstoppable trends reshaping everything. They are delivering serious results, and their plans are even bigger. If you only watch one video today, make sure you watch this one, all the way till the end. Hit the like button, let us get 1,000 likes on this one. Share this with a friend who needs smarter stock ideas. Drop your thoughts in the comments. I read them all. Subscribe so you do not miss the next important financial investing update. We are building a community of smart investors. Your support helps us bring you more value. It truly makes a huge difference. In this video, we are looking at two stocks built for long-term winners. Not flash-in-the-pan names, but durable compounding machines. They have scaled operations at incredible speed. They built deep moats through technology and scale. They are key to artificial intelligence and cloud computing. Two massive shifts. We will use clear facts and hard data from the research you provided. No distractions, no extra tickers. Our focus is laser-sharp on CrowdStrike, ticker CRWD. Let us dive in. CrowdStrike leads in cloud-native security, protecting endpoints, servers, and entire networks. Its subscription model drives steady, predictable recurring revenue. That reliability fuels long-term planning and fearless innovation. Recent reports show record net new ARR. $265 million in a single quarter. A 73% year-over-year jump. Ending ARR reached about $4.92 billion. Growth accelerated to roughly 23% year-over-year. Customers stick and they buy more over time. AI is baked into the Falcon platform, helping stop advanced threats fast. Its unified architecture keeps the platform strong and tightly integrated. Top analysts have taken notice with fresh upgrades. Targeted acquisitions closed key product gaps and strengthened the all-in-one platform. This is how leaders extend their lead. In the most recent quarter, revenue rose about 21% year-over-year, hitting roughly $1.23 billion. Annual recurring revenue climbed in the low 30% range. Retention remains strong, and the balance sheet is in excellent shape. Be balanced. Competition is intense, and the valuation carries a premium. Premium names can be volatile in the short term, but unit economics are attractive and value compounds over time. Focus on leadership, recurring revenue, AI edge, and disciplined acquisitions. CrowdStrike stands out as a major player in cybersecurity with a market capitalization of $112 billion, reflecting how much investors value its role in protecting the digital world. In 2024, the company generated roughly $3 billion in revenue, showing strong demand for its cloud-native security platform as cyber threats continue to rise globally. However, CrowdStrike is still in an investment and expansion phase, reporting an earnings per share of -$1.27, along with a net loss of about $89.32 million. For long-term investors, this highlights a company prioritizing growth, innovation, and market leadership over short-term profitability. This video is brought to you by Value Stocks Investing Master Course. If you are looking to grow wealth with solid, undervalued stocks but unsure where to start, this course shows you how to identify great companies, make smart decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Level up with actionable frameworks that you can use right away. Now, let us shift to the bedrock of the chip world. Now for our second giant, Taiwan Semiconductor Manufacturing Company, ticker TSM. It is the most dominant, technologically advanced chip foundry on the planet. TSMC does not design chips, it manufactures the most advanced ones for top customers. That places TSMC at the core of the AI hardware boom. As AI models grow, demand for cutting-edge chips expands with them. TSMC delivered record results, with net income up roughly 35% year-over-year in Q4 2025. Net income reached about $505.7 billion, with EPS up sharply. Management says demand for AI remains very strong, lifting server chip demand. Guidance projects nearly 30% revenue growth for 2026. AI accelerators are expected to surge at a rapid, compound growth rate through 2029. To meet demand, TSMC is boosting capital expenditures in a big way. Plans call for $52 to $56 billion of capex in 2026, up from about $40.9 billion in 2025. Expansion in the United States is key, with the second Arizona fab construction now complete. Tool moving and installation are planned, aiming to ramp next steps on schedule. The goal is high-volume manufacturing in 2027, supporting leading-edge customers in smartphones, AI, and high-performance computing. U.S. expansion boosts footprint, diversification, and supply chain resilience. Production moves closer to key American customers seeking secure, advanced manufacturing. Onshoring momentum supports this strategy. TSMC controls the most advanced process technology, a massive barrier to entry. Deep, long-standing customer relationships reinforce its moat. Analysts remain broadly bullish on mid to long-term growth tied to AI demand. The AI foundry market shows robust annual growth expectations. Forecasts call for strong revenue growth in 2026 and 2027. Risks include enormous capital needs and industry cyclicality. Management must align massive spend with shifting chip demand, yet AI demand appears more structural than past cycles. On a much larger scale, Taiwan semiconductor manufacturing represents one of the most critical companies in the global technology ecosystem. With a market capitalization of approximately $1.76 trillion, it sits among the most valuable companies in the world. In 2024, TSM delivered earnings per share of $10.65 and traded at a price-to-earnings ratio of 31.88, reflecting both its profitability and its premium position in advanced chip manufacturing. The company reported revenue of about 2.89 trillion Taiwanese dollars for the year, alongside net income of roughly 1.15 trillion Taiwanese dollars. These figures underscore TSM's dominant role in semiconductor production and its ability to generate massive, consistent profits as global demand for advanced computing power continues to grow. With forward-leaning investments and an indispensable role in tech, the long-term case remains compelling. TSMC is the bedrock of the digital age. Why do these two fit long-term holdings so well? Structural positioning. CrowdStrike protects critical systems as cloud and hybrid work expand. Cybersecurity is essential and growing. TSMC makes the brains of the future, from AI to large-scale compute. Faster, smaller, more efficient chips are a durable global need. CrowdStrike pairs strong ARR momentum with high retention. TSMC scales revenue with relentless chip demand and multi-year capacity builds. Both reinvest intelligently to extend their lead. If you're enjoying these stock tips and ready to level up, I have got something game-changing for you. I have just relaunched my Value Stocks Investing Master Course, built on principles used by legends like Warren Buffett and Benjamin Graham. Not just theory, you will spot undervalued companies using real metrics, build a high-quality portfolio, and protect your investments through any market. It is packed with step-by-step lessons, powerful insights, and practical strategies. Click the link in the description and pinned comment to join today. Trust me, your future self will thank you. Want exclusive tips, in-depth analysis, real-time trade alerts, and free guides? Join the StocksGalore Patreon today. Members get deep dives on the stocks we discuss. Link in the description. Question for you. Which has the bigger run over the next 5 years, CrowdStrike or TSMC, and why? Tell me in the comments. Do not forget to like, share your thoughts below, and subscribe so you do not miss the next important investing update. Thanks for watching. See you in the next one.